Thanks for tuning in. Thanks for tuning in to India Market Close. I am your host Niraj Shah with Tamanna Inamdar, and let's get the markets up and running because we are not looking at a very pretty picture. It's the second day on a trot wherein the cuts are deep. In fact, much deeper than yesterday, because yesterday the cuts came in the last 1 hour of trade. Today we are already about 1/6%, 22738, comfortably below 22,800. It's not a sell-off, but it is looking wobbly. The market breadth also. Actually, yesterday we were in a negative on the market breadth right from the start. Today we are in the positive from a breadth perspective, marginally at that, if you will. I think these charts are also showing a bit of a mixed picture, really. Not quite correct, but the breadth isn't necessarily the most optimistic. And we can, on the large caps at least, let's just pull up the Nifty point contributors, because that will give you a story. Banks are being taken to the cleaners. ICICI Bank, HDFC Bank and Axis Bank amongst the top point contributors on the losing side, giving companies Reliance Industries, so not that great. On the flip side, some bit of a defensive bent per se in Power Grid, ITC and Sun Pharma, and Hindalco being the top gainer by virtue of the Novelis IPO papers being filed and the sum of part valuation and how Novelis is, the EV of Novelis being higher than what people had penciled in, leading to this further upside that we're seeing in the stock price of Hindalco. So that's the long and short of what the large caps are doing, but a lot of pressure at that end of the spectrum. Tamanna, good afternoon.
Good afternoon, Niraj, and you're absolutely right. This is an overall, I would say, stressed situation. Over 500 points down on the Sensex this afternoon. The Nifty has cracked way below the 22,800 mark, just about hanging on above 22,700 at this point, 733. And yeah, absolutely right. Financials are the big pain point, not just on the Nifty, but across the board. Like pull up a PNB Housing, for example. And yes, there was a news flow there. You've had two large foreign investors pair stake. But you've seen quite a crack, 4.5% down. Even the entire insurance pack, and I wonder if this could have some kind of could be a fallout of the news that LIC wants to foray into health insurance, but nevertheless, LIC also 1% down. But look at an ICICI Pru, SBI Life, HDFC Life, HDFC AMC, all of them, all the financials really hurting. ICICI Lombard about 2% down. We should pull up Star Health and look at what's happening there. And if that really is something that is impacting the mood. So now what's the worry? You may wonder. Is it all about elections? Is it all about markets? And just in a bit, we'll play out a bit of that conversation. You saw those pictures on your screen briefly. Home Minister Amit Shah speaking with us today and talking about how market volatility, and I thought this was important, Niraj, market volatility should not be necessarily linked to the election outcome. This is something that we've been doing, as in the market has been doing for the last several sessions. That's a very cursory way to look at it. This is a market that wants to perhaps book some profits before the big event as well. So maybe you're seeing some of that come in. Despite some positive news this afternoon on S&P 500, on S&P turning quite bullish on India. They've not yet changed the rating, but the outlook has been raised from stable to positive, which is fairly big. And they're talking about a possible ratings upgrade in the next 24 months. What they also put that down to is the path of fiscal consolidation that the country is on. They point out that they don't expect that to change no matter what the election outcome. I thought that was also very interesting, that you are seeing now an overall change in picture as far as India is concerned. So all of these positives are there. But if you look at just this afternoon in isolation, yes, it's a tough day, no doubt.
Okay. Well, some positives out there. And just before we get in our big market voice today, Mahesh Nandurkar, who should be joining us in about a couple of minutes from now, we'll get in our colleague Mahima to try and to tell us what is it that the different market, what is the different brokerage houses and brokerage and their view is on the election verdict and the resultant market impact. Mahima, good afternoon.
Good afternoon, Niraj. So I'll start with Bernstein. Well, Bernstein has given two case scenarios where they've said that BJP alone wins 290 seats and NDA wins 340 seats. Then immediate market rally is expected in the short, and there would be a short-term profit booking, and high single-digit to low double-digit returns in the Nifty this year is expected. They're also saying that infra and capex run will continue. But there's another scenario where BJP gets less than 240 seats and NDA also gets less than 270 seats. Heavy profit booking in near term and and low or negligible returns for markets this year, and inflation will likely go beyond 6% is what they're saying. Then we have Phillip Capital, where in bullish case scenario they're expecting 325 plus BJP seats and 360 plus NDA seats. They're saying positive near to long-term stance in equities, earnings and economy, and assuming that policy continuity and execution will be at the same rate. In bearish case scenario, they're saying BJP doesn't secure a majority, and this might lead to a sharp sell-off in equities. Then we had Nomura, where they've said that if NDA returns to power, they're expecting medium-term GDP growth of 7 to 8%, expect a 25 to 50 BPS cumulative cuts in FY25, and they're saying that INR will remain stable in the first trading session. In case INDI alliance wins, well, expecting a GDP dip of below 6.5%. Then we have JM Financial, where they've mentioned that policy continuity will ensure opportunities in defense and capital goods space. They've said that valuation comfort is available in private banks and consumers, and they expect large caps to outperform the SMIDs in this post-election cycle, which has not been the case so far. Then lastly, we have CLSA, which have given preferred Modi stocks. In the PSU space, they've given stocks like ONGC, NTPC, NHPC, SBI, Power Finance, IGL and Mahanagar Gas. In non-PSU space, there are stocks like Ashok Leyland, Ultratech, L&T, and stocks like Bharti Airtel, Indus Tower and Reliance. And they're saying that 90% of these Modi stocks have beaten the benchmark Nifty in the past 6 months, and they expect the rally to continue in the short term if the outcome of the results, election results is strong. And lastly, post-election, they're expecting narrow election theme-based rally may end in June to July, and they see that banks are at best risk-reward India growth play in the second half of FY24. So this is the overall outlook of all these brokerage notes.
Right. Thank you for that, Mahima. You had to take 6 to 7 notes and put them together in that small conversation. So thank you for that. But we have a very special guest today on the show. Mahesh Nandurkar, Head of Research and MD at Jefferies India, is joining us. Mahesh, welcome. An absolute pleasure to speak with you here on NDTV Profit. And what a great time to have you on. When we have so much, I would say, not just speculation, guesswork, educated guesses on what we're going to see on June 4th and on. In your view, how big is this event? I mean, right now, up close, yes, 3rd and 4th June seem like the biggest thing there is. But do you think that the story is much larger as far as Indian equities goes?
Yeah, thank you for having me here. It's a big event as far as the political environment in the country goes. But what we have seen historically, and probably will happen this time around as well, that the markets do come up with their own expectations, and if the actual numbers are somewhat closer to what the market expectations are, then you may not really see any big reaction from the market side. And looks like at this point in time, the market expectation is somewhere between maybe, let's say, like 290 seats to 305 seats or something like that, for the current ruling party. So any number in between that range will probably will probably be in line with the expectations as such. But yeah, I mean, any kind of number that is significantly higher or lower than that will obviously cause some reactions. But I still kind of feel that economic cycles are much more stronger, and I think India is clearly on the path of economic growth driven by investment. So I think some part of that story will continue to remain no matter what the outcome is.
Mahesh, now I know that's the big picture and all of that, but I have to ask you the question that everyone's asking everyone right now. It would be unfair to my viewers if I didn't. कि आपका number क्या है? What is the number you have for the BJP, for the NDA?
No, as I mentioned, the current expectations, is, a number at around 300 or so, for the BJP. Maybe so, basically it looks like the consensus, market expectation is, probably a repeat of what happened 5 years ago, back in 2019. That I think seems to be, the number, I would say at this point in time.
Anything sub 300, even if BJP alone is over 272, would it be seen as a disappointment for the market?
Yeah, I would think so. It would come across, as a disappointment, in my view, although there would still be a strong and a stable government. And I think that is, all the more the scenario given how big the retail participation has been in the markets, more recently. And, we ourselves have been, quite positively surprised, I must say, looking at some of the numbers. And, if you look at this current year, calendar year 2024, and we now are almost 4.5 months or 5 months, into this current calendar year. And, on an average, we've seen almost $7 billion of monthly inflows into the equity markets from domestic investors. And when I say $7 billion a month, I'm including, all kinds of domestic investors, which is investors into the equity mutual funds, whether SIP or non-SIP, direct investments into the single stocks, and also through the insurance and the other institutional segment as well. But, on an overall basis, still, a number of $7 billion is a staggeringly high number, which annualizes to, as we can figure out, almost $85 billion, in a year. And while, we have been, very bullish, on the structural part of the retail participation and how, Indian average household has been under invested in equities and how that number, should be going up. And it has gone up. But this number of $80 billion plus on an annualized basis is much more than what that sustainable or a predictable number is. And so in that context, there are elevated expectations. So a mere 270 or 280, I think, will probably come across as a disappointment, given where these flows have been.
Mahesh, good afternoon. Niraj here. And, we borrowed the lovely note that you wrote on these flows and did a small piece today on the morning on our shows as well. Very, very good insights, including the fact that it's split so evenly between the predictable flows and the unpredictable flows, if you will. Just one question, Mahesh, on this before I come to other topics. I heard you say that so this below 300 number, if it's a disappointment, would it be a flash disappointment because you need 270 to run the government per se? So would it be a flash disappointment or could it be a longer term disappointment? Part one. Part two of my question: if the numbers are much higher than what is budgeted for now, does it give a further impetus to an already expensive market?
Yeah, so if you just look at it from a pure economic outlook perspective, I think what the markets really need or what the investors are looking out for is a stable government with stable and predictable policies over the next 5 years. And, you get that even with 270 or 290 or even 330 or, whatever that number might be. But I think, what the investors or the market is looking at is also a continued thrust towards the investments or the capex program. And I think, if the numbers are closer to 270, 280 or something like that, I believe that certain segments of the investors will begin to think that the government might actually, reshuffle the balance, maybe a little bit away from the capex focus that it has been, and maybe kind of, becomes a little bit more populist. So those are the kind of, small shifts that could happen in the government policies. And as I said, it doesn't really change in any meaningful way the longer term structural story of that of an investment cycle, the property cycle, and so on. But can cause, some of the market investors to believe that, maybe the pace of capex improvement, property cycle improvement, etc., might slow down. So yeah, that could be the worry.
Noted. Mahesh, the other aspect is two things that have happened. One, the RBI bonanza that came in, and what does that do to either capex spend or maybe even fiscal consolidation? And two, on that, right, S&P's outlook changed today, if you will, and how big a factor could that be over the course of the near term?
Yeah, I think both are, macro positives, although the first one is much more tangible and much more quantifiable, which is the money flowing in from the RBI. And the additional number coming in from the RBI is roughly 40 bips of GDP. And that's a reasonable, leeway that the government has to decide in which direction that they want to spend that money on. Obviously, one sort of possibility is that the government could use that money to reduce the fiscal deficit even more than what has been projected. or maybe the government decides to kind of spend it, and maybe they kind of decide to spend it maybe equally between the capex and the non-capex parts. There are lots of ways in which the government could utilize that, and I think higher the number of seats, higher will be the probability, in my view, that a large part of this additional RBI bonanza goes towards the capex side, the infra side, and something that the stock market investors would really like to see. Yeah, so I guess so my sense is that the government may not necessarily take all these savings into the fiscal deficit and would rather spend it, rather than use it for fiscal deficit reduction over and above what has already been proposed in the February budget. But anyway, I mean, we are maybe like a month or so away from that event, so we'll see what the new government has to say about that. So that is a much bigger factor in my view. S&P, rating, yes, that's a positive for sure. But I think, from a more tangible perspective, the other, things to look at will be the index inclusion of India, right? I mean, we've already seen 2 global agencies adding India into the emerging market debt, emerging markets of debt indices. So that is already driving some kind of incremental flows onto the debt side. Maybe this S&P thing, adds a little bit more to that. Which means that it's a good news for the currency outlook perspective. I mean, rupee has already been quite a stable currency and like one of the best performing emerging market currencies year to date. And these developments will mean that currency will remain stable, which should help sort of pull in more flows, because stable currency would mean that rupee returns will equalize the dollar returns.
Mahesh, I just want to come back for a second to, and I think you partly spoke about it in your previous answer, but just this point about why do you see the risk of domestic flow reversal? You say that that risk is rising in your note, and yes, perhaps some of it may be linked to the election outcome, but is there more to it? Is it only a political risk? Is it a taxation risk on derivatives? And if you could just elaborate on that because the domestic flows, I would say, is what has been fueling the markets, even when FIIs have not been coming in.
Yeah, true. No, so, for the longest period of time, we've been, very, very, felt very strongly about this whole theme, about the domestic money coming into the markets. And that's one of the key reasons why, while the Indian market appear expensive, but that high multiples are going to sustain because, of the domestic flows. But I believe that, maybe a number of around $40 to $50 billion per year of domestic money coming to the market appears to be more sustainable. That also roughly equals, about say 10% or so of financial savings, about 5% or so of total savings. And which is a number that seems to be kind of broadly in line with where the other emerging markets are, and still somewhat lower than the developed world. But developed world is developed world. But this current number that we're seeing of almost $80 to $90 billion is like almost 20% of financial savings, 10% of overall savings. These are high numbers, and these are the kind of numbers which are typically seen in developed world. And we are not developed as of now. So my sense is that there is an element of unsustainable flows that we are seeing at this point in time. So I think there is some possibility of those numbers normalizing downwards. What are the triggers for that? Triggers for that could be in the form of maybe some kind of a regulatory action towards curbing of the curbing of the the derivatives market volumes, and maybe if that has some kind of a knock-on impact on some of these small cap, mid cap names, because there has been certain section of investors who have been going long on these small and mid cap stocks and hedging those risks with the options market. But if there were to be some additional restrictions on the options market, then it has a knock-on impact on the on the small cap, mid cap names as well. So that's one of the possibilities. So I'm not saying more, so I'm not saying that, it is to do with the political risk. I'm just saying that these numbers on a standalone basis appear to be more than where the stable or predictable number would be.
So no, I'm just so sorry, but one more follow-up, because I find this fascinating. You're saying that as a proportion of savings, the amount that Indians overall are investing is akin to what developed nations do. We are a developing nation, so a return to mean is possible. Is there also a possibility that this sort of outlier behavior is because there seems to be a recent awakening to what equity markets can do for your own financials, and that could develop? Because if you look at penetration of equity as an investment as proportion of population, it's still very, very less. I'm just wondering what the other side of this is.
Yeah, sure. No, absolutely. There is no doubt that we are in the middle of this long-term process of financialization of saving. And, there's one big part of household savings which has given the rise to financialization is the gold portion. So our proprietary analysis shows that gold holdings account for almost 15% of the total stock of assets that the Indian households own. So that at the stock level, 15% of stock of the assets of Indian households are in gold. But when you look at the last 5 or 7 or 10 years and look at in the incremental flows into different asset classes, gold has accounted for only 5%, which means that as compared to historical numbers, almost 10 percentage points of savings are not going into gold but going to some other financial assets, including the equity markets. And as you rightly mentioned, equity markets have delivered excellent returns, and there is rising financial literacy, and more people are getting aware about what is the stock market, and it is clearly driving more and more investors to come into that segment. And it's actually quite heartening to see that as things stand today, there are about 9 crore unique investors investing in the Indian stock market. So that's a pretty large number, and it is very heartening to see that. But at the same time, when you look at some of the things like this options market or some of the other markets, I kind of believe that a certain section of these investors are probably investing in the markets without really understanding the underlying risks. So I'm quite happy when I see a big jump in the SIP numbers or a big jump in the mutual fund flow numbers, because that is a much more steady state way of investing. SIP is obviously much more steady than the overall mutual funds. But some of these trend about these single stocks and these options is probably something that we cannot take for granted.
True. Mahesh, one final question from mine at least. Assuming that the election verdict is what the market would like, what would be your top overweight stance, not just from a next 6-month to 12-month perspective, if you want to give a longer term one, then even that?
Yeah, so from a longer term perspective, I continue to believe that the key change in the economic drivers, driving the GDP growth has changed, from the earlier primarily consumption-driven factors to now more investment-driven factors. And the best way to play that through the stock market would be, overweighting the real estate, sectors and the allied sectors, associated with the housing boom. The second, I would still highlight as the power and utilities, because that is still, the sort of place where, there's a considerable gap in terms of demand supply, and likely to stay that way for the next few years to come. So power utilities is the second area, and the third, I would say, is the industrial stroke manufacturing. So these three are still the sectors that I would overweight, from the longer term perspective. We still like the state-owned enterprises, the PSU story. We still, like select names, in the PSU banks and some of the oil names and, the mining names, etc. So that is still a story that I would like to own, from a longer term perspective as well. Obviously certain banks, look quite interesting. But I would still definitely make that statement that what has necessarily worked in the last 10 years, we cannot really take it for granted that the same kind of stocks and high quality names and high ROE names will continue to perform in the next 5 to 10 years, because the risk appetite in the economy has gone up, has changed, and the sectors that are benefiting from that are not the ones that benefited in the previous 10 years when there was an element of risk aversion in the economy, not the stock market, the risk aversion in the economy, which was evident in the NPL cycle in the banks, which was evident in the in the debt to equity levels of the Indian corporates going down. All that is reversing as we speak, and therefore the four sectors that I identified, I think are still the best way to bet from a longer perspective.
So long term is always exciting, Mahesh, but again, viewers will not forgive me if I don't ask you, where do you see the Nifty at the end of this calendar year, end of 2024? So many numbers doing the rounds. Once we have elections, etc., out of the way, first budget post the government swearing in, where do you see, what is your internal Nifty number for December 2024, end of December 2024?
Yeah. So end of December 2024, on the Nifty side, or, let's say from the next, 12-month perspective, I would still think that, Nifty, the large cap, index, will give you double-digit returns. So I'm still expecting anywhere between 12 to 14% return over the next 12 months, from the large cap Nifty. But obviously for mid caps and small caps, I think, we've seen huge gains already. And maybe the mid cap, small cap returns probably toned down as compared to what we've seen in the last 12 months to a much more kind of moderate, maybe a similar kind of a 10% kind of a number for the mid cap, small caps as well.
Nifty number, where do you think the Nifty will be at the end of the year?
Yeah, I mean, Nifty right now is about 22,700 or so. And as I said, we can do the maths. I'm looking at almost about a 12% kind of a number. So 12 months down the line, so we're talking about in May 2025, will probably be somewhere around 25,000, I would say.
All right. So May 2025, Nifty at 25,000 is a projection by Mahesh Nandurkar, Head of Research and MD at Jefferies India. Fantastic chatting with you, Mahesh. We hope to have the opportunity to speak with you once again soon. So that's a fairly optimistic outlook, I would say, Niraj, all things considered.
Yeah, and identifying themes for us and more. So pretty interesting as to what happens. I think the note on that flows was very, very stable. But okay, one more big voice as we get in, make it a habit to get in some of the biggest voices. This one, arguably, the most important voice is Mr. Dinesh Kumar Khara, chairperson of State Bank of India, joins in on this S&P outlook change news. Mr. Khara, good having you. Niraj here, good afternoon. What do you make of this? While the rating upgrade is maybe due in the next 24 months, what do you make of this outlook change?
First of all, thank you very much for having me on your channel. Well, the way I look at it is that this improvement in the rating in terms of the outlook from positive to positive from stable, actually it augurs very well as far as the likely scenario is concerned. We are already witnessing the likely reduction in the fiscal deficit coming down from 5.8 to 5.1 in the financial year 25, and thereafter also if this trajectory continues, hopefully we'll get to see the fiscal deficit coming down to 4.5 in 25-26, and it is all riding on the fact that we are seeing decent growth in the GDP, and also the GST collections are improving month after month. It actually speaks very well, and we are quite hopeful that this kind of a trajectory should continue going forward, and eventually it should lead to upgrade in our sovereign credit rating too. I think these are the early steps when they are changing the outlook from stable to positive. So that is, I would say that it's a very positive sign for the Indian economy, and the efforts which have been put in the past have been very well recognized by the global rating agency.
Mr. Khara, good afternoon. Tamanna here. I was just saying it's taken 14 years for S&P Global Ratings to push India to stable, and it was in 2010 that we were made stable, and now 14 years to go from stable to positive, maybe another 24 months for an actual ratings upgrade. I wanted to understand why this is going to matter and how you see it as a big deal in terms of fund flows, in terms of cost of funds. Why is this really, really important? We're all talking about why it's positive, why it's, how it's a big deal, but I want to understand why and what difference it would make from your perspective.
No, it is certainly, it makes a huge difference. When it comes to global investors, they all look at the rating of the country in particular. So I think this actually will be an early sign for the cost of funds for the country, particularly when we raise debt overseas, or alternatively when the overseas investors are investing into the country. They always look at the sovereign rating. So this is something which will probably give them the necessary encouragement to stay invested into the country, bring in more money, and also offer us the money at even cheaper rates. So to that extent, it all augurs very well for the Indian economy.
Mr. Khara, one question. A couple of positive macro developments have happened in the recent past. This S&P outlook notwithstanding alone, the bonanza from the Reserve Bank of India, and the resultant impact that people think it will have on yields as well. We have seen a bit of a reduction, not quite much there, but there is also this JP Morgan bond inclusion due to happen starting June. What's your view, sir, on how would yields and cost of borrowing behave over the course of the next couple of months at least? We wait for the RBI action the way we do, but these natural movements that have happened, what does that do to yields per se?
See, eventually when it comes to yield, there are multiple factors which actually impacts the yield. So the global money coming in is one of the factors. India debt paper getting included into the JP Morgan, that very clearly is a reflection that the money flows will actually improve. But how much will it improve will also be a function of how the interest rate market will look like across the globe. So I think it is, as far as the Indian economy is concerned, there is a attractiveness, but when it comes to competitive attractiveness, that will depend upon how the other economies are playing out. So I think all said and done, my sense is that these are, we have to see it in a very positive light, and we have to actually this actually outlook change also is nothing but a reflection of the confidence which is shown by the global rating agency in the Indian economy. So I think it's a culmination of whatever steps we have taken. But eventually, my expectation is that it will certainly have an impact on the interest cost of the funds which we are raising globally.
Absolutely. Thank you so much, Mr. Khara, for speaking with us. That was an exclusive conversation with Dinesh Kumar Khara, the chairperson of State Bank of India, on big news coming in this afternoon. In fact, we have more of that special coverage lined up. Time for a very quick break, but we're right back. Our eye on the market as well, which is having a tough day, especially the banks and financials. But we'll come back. What you should do in this market, focus on our big stories and all of that after the break. welcome back. Focus this afternoon on the S&P news coming in, moving India from stable to positive. Let me go across to my colleague Murli Swaminathan, who's in conversation with Sanjeev Sanyal.
Which is something, every country in the world faced. But since then, it has been on a systematic basis coming down. And by the way, even then, our consolidated debt to GDP ratio is much lower than that of countries rated in, AAA, AA, single A countries, whether it's the US or Japan or European countries, our debt is much, much more sustainable. So I don't know why we should be in this game of being compared to other developing countries. Our macro indicators are all better than theirs on every account, and our ability to repay our debt is much better than theirs on every account.
Right. One very important point that comes to mind. In fact, the rating agency has mentioned this in the note. Let me read out. Surging central expenditure (capex) by the central government and to some extent by state governments will help to spur investment and construction activities. Based on budget plans for 2025, fiscal 2025, our expectation of strong revenue growth this will support is likely to continue. So what are your thoughts on capex, strong consumer sentiment?
Well, I mean, this continues with what we have talked about for some time, which is that we need infrastructure, and this government has been very committed to creating infrastructure, and we continue to be so. So if you read our budget speeches and budget documents, you name it, which every form of infrastructure has seen big increases in spending. So I think that will continue, and we are committed to it.
Do you think the private sector is slightly behind in terms of capex?
Well, they may have for some time, but I think in the last 1 year or so, you can clearly see an increase in private sector participation. And I know for a fact that there are ever larger plans coming in from both the private sector as well as from foreign direct investments. So many of them, by the way, are already on stream. They're coming on stream in various ways. So in the next year or two, expect to see very strong private sector investment.
All right. Well, that's one more voice out there, Sanjeev Sanyal, and speaking about how there should not be a comparison of India to the other markets because of our indebtedness versus some of the others, the debt to GDP and other ratios. By the way, speaking of all of this in between, let's full tilt on the markets. Mazagon Dock came out with numbers, and the stock is up 10%. And while we talk about some businesses which are expensive, Mazagon Dock in Q4 has clocked in very strong growth. But if you look at it YOY perspective as well, their EPS, just pure and basic EPS, has gone up to 96 versus 55. At about 100 rupees of EPS, the stock trades at 33 times. Expensive, yes, for a PSU. Is it egregious? Maybe not, because a clutch of other names are available at much higher valuations as well. So maybe because of this delivery, the stock rightfully is up about 10%. Sudeep Bandyopadhyay of IndiTrade Capital and Ruchit Jain of 5 Paisa with us on the show. Sudeep, thanks for joining in. A lot of macro to talk about, but we've done that enough. So focus a bit on the micro as well and start off with these kind of numbers that some of these PSUs have thrown up. Mazagon Dock right now, we saw Cochin Shipyard, GRSC and some of the others come out with some spectacular numbers. What's your message here, or what your advice here to people who are listening in right now with regards to these stocks?
No, I think fantastic set of numbers, Niraj. There is absolutely no doubt. The numbers of Mazagon Dock are blockbuster. And to an extent, it justifies the aggressive valuation they have been enjoying and the kind of ramp up in price which has happened over the last 1.5 years. I think we have to distinguish between the performers and non-performers in the PSU basket as well. And I'm reasonably confident that will start happening soon. There has been a time when every PSU has started going up, but soon we will see the demarcation. We have seen BHEL numbers. I mean, they were a disaster. It's very clear that simply accumulating orders doesn't ensure success. You have to deliver it, and you have to deliver it efficiently. Unless that's happening, some of these PSUs will start falling behind. Mazagon Dock, Cochin Shipyard, and some of the other shipbuilders have been also amassing tons of orders, and delivery on them has been good. Performance has been good. So I think we will continue to watch this space carefully. But having said that, I think the valuations are reasonably full. I don't think I will recommend an aggressive buy on some of these stocks like Mazagon Dock. It's a good company, good performance, but at 33 times, could you be running to buy this stock? I don't think so. I will look for better opportunities. As far as entire PSU space is concerned, leave aside the banks for a minute. We are bullish on the power sector companies. And if I have to pick some of the PSU companies even now, I think I look towards these power companies like an NTPC and maybe REC PFC.
NTPC numbers weren't that great though, Sudeep, but yes, I get your point about valuations, and Mazagon Dock is just eye-popping there. Ruchit, good afternoon. We're just at that sort of last bit of trade of a very volatile day. So I'm going to start by asking your BTST ideas.
Yeah, hi, very good afternoon. Well, our markets have seen a correction in last 3 trading sessions. And if we look at some of the retracements, we are back towards important support levels of 22,600 to 700 range. So for BTST or for 1 or 2 trading sessions, if one has to take any trade, then I would prefer taking some contra longs over here, since the index is trading at support. Pharma is one sector which we are expecting some good momentum in next 2 to 3 trading sessions because the Nifty Pharma index is on the verge of a breakout from its consolidation. So I think one can look for some of the pharma names. Biocon within the pharma stock is looking quite positive over here. High top, high bottom structure, recent price up move supported by good volumes. So Biocon with stock below 310, one can go long for potential targets of 340. And Crompton Consumer is another name which is relatively doing quite well. Recently, at the start of the week, we witnessed a price up move supported by very high volumes. Last 3 trading sessions, the broader markets have corrected, but the stock has seen more of a sideways move, means more of a time-wise correction, and the important supports are intact. And the stock has come out of a long consolidation phase of late. So I think Crompton would be one stock where the risk-reward ratio still seems favorable to create fresh longs in this consolidation. Short-term traders can buy with stock below 383 for a potential pullback move towards 412.
Ruchit, the index itself now at the lowest point of the day, is it around supports or has it broken them, and would you be negative here?
So no, I won't be negative over here. The cool-off that we have seen, we have not seen any kind of short formations in the index in last 3 trading sessions. This is, I think, so it's just a pullback move. The daily readings have not yet turned negative. And just because we were around the higher end of that range, the resistance was around 23,000, 23,100. And that was the exact level from where we witnessed this pullback move. So very crucial support around 22,600 to 700 range. So maybe tomorrow, first of the session, we could see some more nervousness. But I think these are not the levels to turn negative in the markets. 22,600, 22,700 provides a good risk-reward ratio to form fresh longs over here.
So we have been seeing volatility in the markets, and it's a pre-election jitters. Is it concern over what will happen on June 4th, or is it really some profit booking? So we had an exclusive conversation with Home Minister Amit Shah today, who says the BJP will win on June 4th with over 400 seats and the markets will rise. He's also said that BJP's win and markets reaction should not really be interlinked in the short term. Listen in.
प्रॉफिट बुकिंग ये रूटीन फिनोमिना है. आप इसको चुनाव के साथ मत जुड़िए. जो शॉर्ट टर्म बिजनेस के लिए शेयर बाजार में है वो ऑब्वियसली प्रॉफिट बुक करते हैं. तो 1200-1300 पॉइंट बढ़ता है तो 300-400 पॉइंट वापिस आना बड़ी सामान्य प्रक्रिया है. और चुनाव के बगैर भी साल में ये 15-20 बार होता है. तो उसको चुनाव के साथ मत जुड़िए. मैं फिर से आपकी चैनल पर कहना चाहता हूं, 4 तारीख को नरेंद्र मोदी फिर से प्रधानमंत्री बनने जा रहे हैं. हम 400 पार करेंगे और स्थिर सरकार आने वाली है और शेयर मार्केट भी बढ़ने वाला है.
Okay, so that's a reiteration of what Home Minister Amit Shah said on NDTV network earlier as well, and I thought it's interesting talking about profit booking. And Sudeep, clearly that is some of what we're seeing. The hit on financials today, how do you see that? And if you were to cherry pick right now, what in the financials would you look at in that entire space that you would like? All your insurance companies are also hit, as are your private and public sector banks.
Well, I think, to an extent, it's right. Some amount of profit booking is definitely happening. After such a long election, which is definitely significant, a bit of nervousness nearer the time of the results is par for the course. So I don't think, when you have to read too much into it, it's quite normal. And a little bit of position lightening is happening from predominantly HNIs, is that what our view is. As far as BFSI is concerned, if you have to go and pick BFSI, as you rightly mentioned, insurance is a great space and there is significant value sitting there. Life Insurance Corporation of India, a fantastic performance there, come up with. They're talking about interesting forays into segments which are definitely underpenetrated, like health. And I think the participating policies numbers are increasing. So that's good and augurs well for the future. So this is one company which can be bought at current levels for 1 year kind of a hold. And about 30% upside is what we are looking at. As far as other non-insurance financial services companies are concerned, we like the gold loan companies, and they're also particularly Manappuram. I think the stock got beaten down because of its other non-gold businesses. There were challenges in the microfinance segment, and fundraising got a little bit delayed there, and the asset quality also was a bit under pressure. Whereas the gold business has been making all the right movements. The asset quality also is improving, and considering the valuation, I think it's a good buy at current level if somebody has about 6 months of time. As far as overall banking space is concerned, we are positive on large private sector banks, and HDFC Bank is one bank where I think things have started falling in place. And if somebody has time and looking at an investment for 1 year plus time horizon, I think HDFC Bank is a good bet at current levels.
Okay. 1.5% lower though for HDFC Bank today after 3 days of being a big contributor on the upside. HDFC Bank is just taking a bit of a step back in the session today. What is done really well today is Campus Activewear, up about 19% now if I'm not wrong, while the Nifty is down what it is. Maybe I'm wrong, but no, it is 19.3% higher. Extremely strong showing by Campus Activewear. But I must warn and caution people, not everything that's going up is necessarily getting repeated the next day. Hudson Agro was up about 14% in trade yesterday. It's amongst the top losers in the session today, down about 8% as well. Before I ask Sudeep about some of these fundamental names, so Ruchit, quick word on either Campus or Hudson.
So we have seen a breakout today in Campus, but the stock has been has seen underperformance from a long period of time. So on the higher side, it's quite possible that in this pullback moves, as the stock approaches its resistance, there would be some selling pressure or supply over there. So technically, the next resistance for the stock is seen somewhere around 320 to 330. So we may see a continuation of this pullback moves 320, 330. But frankly, if one is to take a fresh trade for that 8 to 10% move, then the stop losses are much larger. So the risk reward ratio is not favorable for creating fresh longs over here from trading perspective. But if any existing longs are there, then they can wait for this up move towards 320, 330, where they can again take a review on the stock.
Quite a seesaw kind of a day. ABFRL started out weak after its numbers and finance expenses had gone up. That's talk about 5% up today. It's not just Mazgaon, which has been completely thrilling. Look at Cochin Shipyard, look at Bharat Dynamics, all of them doing fantastic. Ruchit, any of these you track and you would recommend for a trade or for about a profit booking right now?
So entire defense space has seen a very good up move in the last few months, but these stocks have already seen a good run up ahead of the elections itself. So I think in case if we see any kind of profit booking post the event, then one should keep a buy on dip approach rather than chasing the stocks at current levels. Momentum readings are a bit overbought after the recent up move. The trend is not negative, but the risk reward ratio is not favorable for fresh longs. I would wait for some sort of declines. Maybe stocks such as Bharat Dynamics or BEL within the defense space are positionally still looking quite bullish. But as I said, I would like to take some buying opportunities in case if we get some dip in the near future.
Let's just pull up Deepak Fertilizer as well. Their numbers in the face of it don't look great, apart from the margin figure, which is boosted quite robustly, 16.8% to 21%. But net profit is down, EBITDA is down, revenues are down. That stock is up though, 5% up, and you can see that sharp uptick. Right after the numbers were out. So, Deep, do you like the fertilizer space, and any views on Deepak Fertilizer?
Well, I like fertilizer, but it's not something which is going to excite the investor in the short term. It's a long-term play. Some of the fertilizer sector reforms, which are long overdue, haven't really fully fructified. And as and when these happen, I think there is a lot of value unlocking can happen in fertilizer sector as well. But I think at this stage, I will give it a pass.
Okay. Well, what's also bounced back today is Sumitomo Chemicals, up about 10% after being 8% higher yesterday and coming off a bit in today's session. This one has jumped up as well. And Sudeep, a clutch of these chemical names have either given very positive commentary or in select cases even performed well. Any thoughts on Sumitomo or any other chemical name, the results of which might have caught your eye?
Well, Niraj, I think our view has been that the entire agrochemical, chemical, specialty chemical space has been beaten down badly over the last 12 to 18 months. They have underperformed, disappointed the market repeatedly. But I think the initial green shoots of turnaround is clearly visible now. And some of these companies, whether it's the results or the commentary, has been very, very positive. Sumitomo is one example of that. We are also positive on some of the other names like PI Industries, even UPL. At current levels, we like UPL also, and we believe that if you are a little patient, give it 6 months. I think we are on the verge of this turnaround.
Okay, well. Give it some time is what Sudeep says, but a large name and selectively has started to turn as well. Some parts of the commentary look pretty solid too. So that's to be borne in mind. What's not done well today, as we very close to market close, but what's not done well today, aside of course, Hatsun Agro, PNB Housing Finance, a large block, 6.5% lower. The word on the street is that a lot of smart money has gotten into the block at the current price as well. Not that it's showing in the price action today. Sudeep, a PNB Housing or maybe any other housing finance name, if you will?
Well, we like Canfin Homes. I think this is one stock which, because of multiple corporate issues, particularly frauds repeatedly, was beaten down significantly, and it hasn't recovered from there yet. And we like the stock. I think things have become better operationally, and this is where we believe there is an opportunity. LIC Housing Finance also can be looked at, but between the two, relatively, we like Canfin Homes.
Do you have a view on Divi's? Sudeep, Divi's again having a very good day. Biocon also doing fairly well today, actually. Gland, Torrent, the entire pharma pack maybe as a defensive trade is relatively decent, but Divi's has seen, a few very good trading sessions. Their numbers have also lived up. Are you constructive on it?
Well, pharma is not really defensive. It is extremely volatile, as we have been witnessing over the last 12, 18 months. But if I have to get into pharma, I either will go into Sun or Cipla, because these two are on the verge of getting a whole lot of things right. So Sun and Cipla amongst the large pharma companies. And if I have to pick up, amongst these medium, smaller companies, I will focus on companies which are focused on Indian market. And Mankind Pharma is one such company which comes to mind, where 95, 96% of business is in India.
Ruchit, any thoughts here on some of these pharma companies which have actually had a good run in the last 3-4 days?
Well, Niraj, if we first look at the Nifty Pharma Index, then it's trading around a very crucial level, because if you look at last 3 months, this index has resisted around that 19,400 almost 3 to 4 times. In case if we see today's high also is coinciding with that 19,400. So in case if we see a breakout above that 19,400 in the Nifty Pharma Index, then I think the entire basket could see some good momentum. Couple of stocks which are looking good. First is a Biocon, which I had recommended at the start of the show, where there is a good high top, high bottom structure, price up move supported by good volumes. Then I think Cipla is another stock where short-term trend is quite positive. price up move supported by good volumes, then consolidations where we have not seen any kind of high volume sell-off. So Cipla also could do well in the near term, and we could see its level somewhere around 1550 to 1560. So overall sector is looking positive, but just we are waiting for a breakout above that hurdle in the Nifty Pharma Index. And once we see a breakout, then from a near-term perspective, I think there could be good outperformance in the pharma names.
Let's pull up Hindalco and see what's happening there. The big boost for the company all day has been the valuations for Novelis, which have been made clear, and the stock holding up fairly decently. It had seen a drop after its opening spike, but back about 3.5% up at 705. Sudeep, I wanted to know your view on Hindalco after the Novelis details are out.
Well, we are very positive. I think this unlocks value of close to $1 billion for Hindalco, depending on where Novelis price settles. And considering that their Voda investment is over, I think this will be used for Hindalco's local business, and that's good news. As far as, and they're only diluting about 7.5%. So I think, and this Novelis listing separately will also benefit Hindalco in a different way. I think they will attract many more investors who also track US and India both. Not the other way around. People are thinking that maybe some investors will, instead of Hindalco, start investing only in Novelis. To my mind, that's not going to happen. It's going to happen the other way, and investors will invest in both. So it's a definitely positive thing for Hindalco. And I think Hindalco can move up to about 750 plus levels within a short span of time.
Okay. Well, gentlemen, on that note, Sudeep and Ruchit, thank you so much for taking the time out and being with us and giving us your advice. Really appreciate your time. About a minute and a half left for the markets to shut shop and bring up the Nifty. It's not a very pretty close, I must say, despite a spate of good news. About 0.7, 0.8% higher. But as Ruchit said, maybe we haven't seen too much of short build-up, which is a good thing. I think the interesting piece will be if the FIs have continued to cover their shorts and build fresh longs. I think we'll analyze the data for the last 2 days and figure that out. Banks too have been slightly skittish in the session today, about 1% lower for the Nifty Bank. Broader markets clearly doing much better than what the large caps have, and which is why the market breadth has been positive. But just the Nifty top gainers and losers will come up on your screen. This number in the chart not matching, so let's remove that. But the top gainers and losers, or even the heat map, and you will see life insurance coming under pressure today, some bit of FMCG. So yesterday's gainers getting a bit of a pullback today. Grasim is in fact down about a couple of percentage points. What's done well is this boy here, 3.5% up for Hindalco, clearly the standout performer. But Pharma too has had its day under the sun, because from a Divi's to a Cipla to Sun Pharma or Reddy's, all of those have done very well.
So Hindalco, if it's the boy that's done well, I don't know what has happened to HDFC Life and SBI Life. Definitely a tough day today. But even on the broader markets, Niraj, the pressure definitely continuing. I want to pull up the advanced decline just to see if we've ended at a better situation than when we started the closing show. And slightly, I would say. Definitely, maybe a bit of an improvement. Declines are still, of course, outpacing the advances. Let's just pull up the top gainers on the BSE 500 and see what's happening over there. And while financials have continued to be in pain point, PNB Housing here because of those stake sales, ICICI Pru also in that space. ZF Commercial has been seesawing last few sessions, and that's what's happening over here. But on the winning side, you can't see the full word there, but that's Campus Activewear. Very good numbers on the face of it, but mostly because their advertising costs have gone down. That has boosted their margins. Their volumes are growing, 11% CAGR. But look at Mazagon Docks. I would say if you have one sort of hero of the day, that's Mazagon Docks. Come rain, come shine. That stock has performed. That company has performed. Paradynamic back there. Sumitomo Chemicals having a good day today. And Cochin Shipyard. These 3 or 4 stocks are the ones that have been consistent performers.
And very interesting Phenolics. I wonder if there's this feud between the two brothers. I wonder if it's gotten resolved, because I think this one has been on a bit of a tear for the last few days. So that's the other interesting one. But as Tamanna said, the day kind of maybe even Stevens for the broader markets, not so much for the large caps. It'll be interesting to see what the 2 penultimate days to the exit polls bring in store. And
Monthly expiry tomorrow for
Which is very
the Nifty.
big.
That's going to be a big day as well to watch out for. So expect rock and roll for the next couple of days, one way or the other.
But yeah, and it'll be interesting to see what the VIX does on Friday then. But we'll be here with all of that action. Remember that, including special programming on Saturday and Sunday post the exit polls. Saturday 8 p.m., Sunday 10 a.m. So you want to tune in for that as well to understand what the exit polls could mean for the markets and in general. But for now, from Tamanna and me and the team that has put this show together, thanks so much for watching.